Welcome back. Let's take a look at another type of current liability. In this exercise, we're going to look at payroll taxes and the salaries expense that the employer pays. So here we have Aspen Ski Resort that has 100 employees, each working 40 hours a week and earning $20 per hour. They tell us although the company does not pay any health or retirement benefits, one of the perks is that the employees are allowed to ski on their free skiing on their days off. Federal income tax are withheld at the rate of 15% and state tax are withheld at 5%. FICA taxes are 7.65% on the first 128,400,000. That number has gone up in the year 2023, earned per employee, and 1.45% thereafter. That part is still the same. Unemployment rate is 6.2% on the first $7,000 earned per employee. So we've been given lots of information over here. And let's see what our journal entry is going to be. We're going to have two separate journal entries. The first one is going to be for salaries expense, and the second one is going to be for the payroll tax expense. So before we get into all those details, look at the first sentence. 100 employees, each employee works $40 or 40 hours per week and earns $20 per hour. We are going to do the journal entries for the first week in the year, in the new year. So we have $20 per hour. It is $20 per hour, not 20 hours. So it's $20 per hour. They work 40 hours per week, and I have 100 employees. So that's my first piece of information that I pulled out. And that is my salaries expense. 20 times 40 times 100. My salaries expense is $80,000. This is what I've committed to. I've told my employees, I'll pay you $80,000 per week. This is for 100 employees. If you're looking at per employee, it's 20 times 40, which is $800. $800 per employee for a total of 100 employees gives me $80,000. Now, the reality is I'm not going to give them a check for that entire $800 for each of them. And why not? Because let's start out. They asked me to withhold 15% of this amount and send it to the federal government, that's to the IRS, towards their federal taxes. So I'm the employer. In my books, I'm creating a liability, federal tax withheld. I'm withholding the tax, but I just don't hang on to it. I have to give it to the government, so it's a payable. So it's the $80,000 times 15%. That's a federal income tax that I'm withholding for my employees. That's $12,000. I also withhold 5% for state taxes. So they've told me state taxes withhold 5%, so $80,000 times 5%, and that is going to also become a liability in my books. State tax withheld payable, and that amount is $4,000. The employee also has to pay FICA taxes. FICA taxes is basically the Social Security tax. They have to pay the FICA taxes, and the FICA tax payable is 7.65%. So there are two parts to it, Social Security tax and the Medicare tax. The Medicare tax is paid on all income that is earned. The Social Security tax is paid on the first, and this number obviously is old. The current number in the year 2023 is much higher than this number. As far as we're concerned, always go with the information given. The question is, per employee, have they exceeded this dollar amount of $128,400? Far from it. How much is each employee getting? 20 times 40 is 800. In this paycheck, each of them is getting 800, so they're nowhere close to the limit. So the full amount, $80,000, is going to be subjected as 7.65%. So that's the Social Security tax and the Medicare tax put together is the FICA payable. So that's the FICA payable. So now that we have all these taxes withheld, how much are we going to give them? The remaining amount is what they get in their paycheck. So what is my responsibility? The full 80,000. I'm giving 57,880 to the employee right now. I have to send out a check of 12,000 to the federal government, 4,000 to the state government. This is on behalf of the employees. And then I have to send out 6120 on behalf of the employees to the Social Security Administration and the Medicare Administration. So these are monies that I withheld for them, and I have to send it out. Until I send it out, it's going to be a liability in my books. Definitely a current liability, because I usually will have to send it out either on the same day or on a quarterly basis. Now, there was this last sentence, unemployment taxes 6.2% on the first $7,000 earned per employee. Again, our employee earned only $800 this current period, so they're within the limit. So who pays the unemployment tax? The unemployment tax is paid only by the employer, not the employee. So what does the employee have to pay? They pay all these taxes. This FICA tax that we have over here, let me highlight this over here for us. The FICA tax is paid by the employer and by the employee. Both the employer and the employee pay this FICA tax. The equal amount, the exact same amount. So I didn't need to recalculate. I could have just copied this number from over here. I could have just copied that number, but I've done the calculation. So this is my tax. I'm the employer. I have to pay 6,120 Social Security tax. And I have that unemployment tax that has to be paid. The unemployment tax we said is 6.2%. So $80,000 times 6.2%. It's for the federal and the state. So the FUTA and SUTA, the acronym, Federal Unemployment Tax Act, State Unemployment Tax Act. So I'm going to write two separate checks, but the combined amount is 4,960. So what do these two numbers constitute for me? These two numbers are my payroll tax expense. It's a balancing figure in the journal entry. So as far as I'm concerned, what's the total amount that I have to pay? I have to pay out. For this 1 week, I have to pay out my total cash outflow. This is going to be my cash outflow. Is going to be 91,080. This is the total amount that I have to pay up for 1 week worth of employment of my these 100 employees. So this is my total cash outflow. The employee, when they see their paycheck, what are they seeing? They're seeing only this number. They're saying 57,880, and I'm saying I'm paying 91,80. So the difference is all these taxes they had to pay. That's why it came out of their paycheck. I had to pay the full amount plus an additional 11,080 payroll taxes. So this is, as an employer, this is what I need to plan for, not the 80,000. So this takes care of the payroll tax liabilities in the books of the employer.